You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 7th day of April, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, in about 50 minutes when Michael joins us, he'll walk you through step by step how to take the trial. We'll get you indicators indicating today, and then you'll get 5 consecutive days with access to everything all of our members have. Not just the live training room, but everything. So again, 50 minutes from now when Michael joins us, he'll walk you through it step by step. First thing he'll do. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back at 12 noon Eastern for the afternoon broadcast, this broadcast, which, unlike the morning broadcast, this one's open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be some days when you're busy and can't join live, but want to catch up later. You can do both of those via our YouTube app, which is our YouTube channel, which is very easy to remember. youtube.com/CFRN. You already got the YouTube part down, so all you have to remember is CFRN. And not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. This is our daily schedule for the afternoon broadcast. So we'll dive right into our daily devotional. The topic we're on for another 5 days, we're on day 5 of 10, listening to God. We've been taught all our life, pray, pray, pray. But part of prayer, and I give it a 90-10 split. 10% of you talking and 90% of you listening to God. Today's scripture is Jeremiah 29, one that most folks are familiar with. It may sound a little different because I'm sharing it with you from the Message translation. This is God's word on the subject. As soon as Babylon's 70 years are up, and not a day before, I'll show up and take care of you as I promised and bring you back home. I know what I'm doing. I have it all planned out. Plans to take care of you, not abandon you. Plans to give you the future you hope for. Again, Jeremiah 29, verses 10 through 11. So on Thursday we talked about how God spoke to people in biblical times. Friday we talked about how God speaks to us in modern day times. Today we'll talk about how God gets our attention. When we walk in the Spirit, alert to God, we hear what He's saying to us as a natural part of our spiritual walk. This is the Christian life, living keenly responsive to the voice of God in whatever fashion He may choose to speak to us. Unfortunately, there are also times when we choose to do things our own way. As a result, we head in a direction that brings us to disaster or disappointment. God's speaking, but we aren't listening. We aren't tuned in to Him. In these times, God often uses unusual means to get our attention. Here's a few. A restless spirit. God has frequently used a persistent restlessness to direct me in my life. When I look back over my life, I can clearly see that every time God moved me from one place to another, He caused me to feel restless for several months beforehand. That restlessness drove me to seek God so that when the time came, I was ready to hear Him. Number 2, an unsolicited word from another person. While not all messages from others are positive, I remember a time when a person said something to me that was very encouraging. I wasn't expecting any compliment or word of affirmation, though I desperately needed one at the time. When I questioned the Lord about it, He let me see that He cared so much for me that He used someone who was almost a stranger to tell me so, in order that He might startle me into paying attention. Number 3, unusual circumstances, both bad and good. Circumstances can set us up to open our hearts to God and turn our attention fully towards Him. While not all circumstances are caused by God, I've seen numerous examples in the course of my life and ministry, illness accidents, bankruptcies, divorce, and unusual blessings of abundance bring people to their knees and to a total reliance on Christ, sometimes for the first time in their lives. And number 4, they even wrote a country western song about it, unanswered prayers. While God answers many of our prayers in the way in which we desire, sometimes He'll delay an answer or answer a prayer with a definitive no in order to get our attention or keep us from straying off course. He knows that when all of our prayers seem to be answered, we may become complacent and simply cruise through life without listening to what He desires to say to us. There's no such thing as an accident with God. The Father may use many different methods to get our attention and keep us in alignment with His will for our lives. But we must always remember that He knows exactly what's best for us, and He'll never quit trying to reach us so that He can guide us into the wonderful plans and purposes He has in store for each of us. Let's pray. Heavenly Father, thank You for Your promise of hope and a future. Even in seasons of waiting, help us to trust Your plans. Plans to prosper us and not to harm us. Fill our hearts with peace, knowing that You are always working for our good. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Red Monday. Oh, boy. Well, let me give you the numbers from around the world. Hang on for me 1 second. Okay, that was quick. All right. Numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices, as they're called. Dow is down 823 points. That's a little over 2%. The NASDAQ down 224 points, 1.5%. S&P 500 down 88, 1.75%. And the Russell 2000 down 24 points. It's well over 1.25%. Now this morning the markets reversed and rallied on a false rumor that was posted on the internet. But once everybody found out it wasn't true, and I'll read you the article about it here in a minute. So you saw all this red, and then suddenly there was all this powerful green, and as quickly as it came, it left. Well, there's a reason. I'll go over in a minute. In the commodity basket, crude oil down $1.33, trading 60.63 last. It's a drop of almost 2.25%. Gold down $39.50, trading 29.95 last. That's a drop of over 1.25%. Silver up 65 cents, trading 29.88 last. That's a gain of almost 2.25%. In the Asian markets at the close, the Nikkei fell 2,644 points, almost 8%. Shanghai dropped 245 points. That's a little over 7.25%. The Hang Seng dropped 3,021 points. That's over 13%. And in the European markets at the close, FTSE down 352. That's almost 4.5%. The DAX down 879. That's almost 4.25%. And the CAC down 347, almost 5%. So yes, it was a red day in Asia. It was a red day for the UK. And it's a big red Radio Monday here in the US of A. Let's take a peek at the news. What do we got? Well, not good. A second child has died amid an ongoing measles outbreak in West Texas and the surrounding regions. Officials confirmed this over the weekend with hospital reports suggesting the 8-year-old girl in Lubbock succumbed to measles-related pulmonary failure. The two victims, both reportedly unvaccinated as part of a local Mennonite community, are the first confirmed measles deaths in the U.S. since 2015. What about all these unvaccinated people that have been flowing across our border for the last 4 years? 10 million, 20 million, take your pick. What ultimate effect does that have on our country? And here you have a religious sect, the Mennonites, who they don't bother nobody. Since they choose intentionally not to vaccinate their children, well, of course, that leaves them more vulnerable. But, they're right down there by the border. So, what a shame. Now, measles are a contagious airborne disease which causes rashes, fever, respiratory issues, specifically with young children and immunocompromised people. They are at higher risk. The deployment of a vaccine in 1963 and subsequent public health campaigns led to the disease being declared eliminated, meaning no continuous endemic transition in the U.S. in 2000. Of the 607 measles cases reported this year, almost 90%, 535 cases, are linked to the outbreak, straddling West Texas and eastern New Mexico. Roughly 97% are in unvaccinated patients or those whose vaccination status is, and I'm doing air quotes here, unknown. Flooding continued across the U.S. Midwest and South over the weekend in storms that have claimed at least 17 lives as of yesterday. Days of severe storms have caused rivers to swell rapidly, prompting the National Weather Service to issue flash flood emergencies from Texas to Ohio. At least 45 river locations in multiple states are expected to reach major flood stage, causing widespread damage to infrastructure, homes, and roadways. The storms followed a week of extreme weather that included deadly tornadoes and more than a foot of rain in some locations. While the regions are prone to severe weather, the duration and intensity of the rainfall have led to saturated soil and swollen rivers. The storms have shifted eastward into the Appalachians and southeast. Meteorologists warn that river levels will continue to rise in many areas through early this week. However, a shift to drier conditions is expected by midweek for much of the region. So that's a little good news. So, the White House wants to make one thing clear. The Trump administration is not backing down on implementing reciprocal tariffs. In morning trading today, markets whipsawed after confusion emerged over whether or not President Trump was considering a 90-day pause on his tariff rollout. Headlines that White House economic advisor Kevin Hassett said Trump would consider the pause caused an immediate surge in stocks until it became clear that he never said that. I think the president is going to decide what the president is going to decide, Hassett said in an interview with Fox News when asked specifically if Trump would consider a 90-day pause. Shortly after that, clarity emerged and stocks sold off once again. President Trump and some of his closest economic allies have spent the days since Liberation Day that shook global markets, doubling down on this aggressive tariff policy, while recession fears and markets in free fall have prompted some investors to clamor for cooler heads to prevail. Americans who want to retire right now, the Americans who put away for years in their savings account, I think they don't look at the day-to-day fluctuations in the stock market, according to Treasury Secretary Scott Bessent. The President himself said late Sunday that sometimes you got to take a little medicine to fix something. As we said, since Liberation Day, the market will find its bottom and it will come roaring back, and you'll be looking in the mirror going, how in God's name did I miss one of the biggest market rallies in market history? Go talk to a licensed investment professional and get their advice. The markets and President Trump are piling more pressure on the Federal Reserve, which is not a part of the federal government, it's a privately owned corporation, to consider a near-term interest rate cut as the tariff market sell-off deepens. Traders boosted their bets on the number of Fed cuts this year to 5 and pulled forward their estimate of when those cuts could begin, starting possibly at the next meeting on May 6th and 7th. The odds of a May cut are now above 50%. President Trump also continues to ramp up his own pressure campaign, saying on Truth Social today that the slow-moving Fed should cut rates. He delivered a similar message Friday as Fed Chair Jerome Powell spoke at an event in suburban Washington, D.C. Trump says this would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always late, but he could now change his image and quickly. Cut interest rates, Jerome, and stop playing politics. Powell, he's showing no signs of blinking. He made it clear during his remarks on Friday at an event in Arlington that the Fed isn't in a hurry to take any action on rates, saying it is too soon to say what will be the appropriate path for monetary policy. You do understand the longer that rates stay elevated, the more money those individuals who own the Federal Reserve make, right? You do understand that, right? Okay. Just want to make sure. Danish drug maker Novo Nordisk is looking at an early launch of its blockbuster weight loss drug, Wegovy, in India to better compete with rival Eli Lilly and the populous nation. This is from two sources familiar with the plans and what they told Reuters. You know, I've never seen a lot of fat people in India. They usually look pretty hungry. But if that's where you want to launch your blockbuster weight loss drug, how about eating properly and getting some exercise? I mean, it's always been an option, still is. Novo, which had planned earlier for a 2026 launch of the drug, is now looking to begin selling Wegovy in India this year, probably in the next few months, according to sources who told this to Reuters on conditions of anonymity, as they were not authorized to talk to the media. Novo's also assessing the stock situation to handle the demand in India. They want to avoid any shortage issues. Oh my God. This is the world we live in today, guys. Just gotta face it. Okay, here we go. Logic 247. Last week we ended up with 2%. Stopped out for the entire week. We issued over 50 alerts, and we ended up with, I think, one, which equated to 2% of the alerts being stopped down. Now, this week, we're in week 349. Over the last 349 weeks, we've issued over 19,300 individual handcrafted alerts. 19,300. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, since the markets opened last night at 6 p.m. Eastern, we've issued a total of 14 alerts. Still waiting on the outcome of 7. Now, Valerie did this recap this morning at 6:30 a.m. Eastern. So some of these I know have resolved themselves positively, I do believe. But at the time of the alert, and she'll update it this afternoon, early evening, as she does each day. But this is where it was this morning at 6:30 a.m. Eastern. We were still waiting on the outcome of 7. We had 7 actionable alerts. And so far, nothing stopped out. Now, the logical alerts are designed to help you learn how to read a chart. If you want to learn how to trade, you got to learn how to read the chart first before you can learn how to trade. Imagine trying to become a lawyer if you couldn't read the law books. It'd be tough, huh? Each logical alert has an entry price, an initial target, usually additional targets, and then a final trade to target. if you use the logic alerts properly, you can trade them, okay? But use them for the reason intended. We're approaching a really big round number, 20,000. And as I've said, I may cap production at that point. You still got plenty of time to use the logic alerts to learn how to read a chart. So make hay while the sun shines, okay? Now the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Now 349 weeks and over 19,300 individual alerts. Well, that's a long time and a lot of alerts. But long before we had Logic 247, we had our original alert service, the concierge trade alerts. And they're a little bit different. Number one, they don't come out around the clock. They're posted shortly before or shortly after the Globex Open each evening. Now, Thursday night at 5:55 p.m., that's 5 minutes ahead of the Open, because at 6 p.m. Eastern Thursday night, that became the Friday session. Just like 6 p.m. Eastern tonight will become the Tuesday session, even though it's still Monday night here in the U.S. So I strive to get them out 5 minutes ahead of the Open. But Sundays and Mondays are 2 days that it's a little more difficult, especially Sunday and quite often Monday as well. So anyway, Thursday night they were out 5 minutes ahead of the Open last night, because I'm doing weekly trading zones and all the other things that I have to do to begin the new week. The CTAs were published at 6:25 p.m. Eastern. Now what that means is 25 minutes after the markets opened, all of our members and all of our trial members had all of these targets. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So when we go to the 30-minute charts where all alerts are created, 25 minutes into the first candle, that's when these targets were published. And each logic alert has a timestamp on it, so you know exactly what time those were published. So, with that, we'll mosey on over to the daily chart, where we have a little work to do. Work? Yep. Okay. These are reverse fibs. And so we're going to grab this guy. Wait till it turns green. Left click, hold the left mouse button down, and drag. Now, getting it spot on the daily chart, it's a little tough, but we'll see how well we can do. Okay, the low. I say the low. What is going on? My pop-ups aren't popping up. Well, I'll just let it sit there for a minute and see if it kicks in gear. Will it? I guess it's not going going to. There's so much volatility in the markets, and so, oh, there we go. It's starting to show. Better grab it while the grabbing's good. All right, let's see if we can get it to pop up one more time. Come on, baby. You can do this. Come on. Just gonna have to sit and wait for it. Wait for it. Ah, the low. 48.32. 48.32. Okay. So at least we know what we're shooting for. 48. 35. Nope. Too much. 31. All right. That's pretty close. We're within a point. Okay. Now, this was Friday, Thursday, Wednesday. Now, way back over here is when we began the downtrend. We've been in an uptrend for a very long time. And each time we would put in a new high in the markets, we would adjust the upper line. When you're in an uptrend, you draw your fibs from the low to the high. When you're in a downtrend, as we're in now, you draw from the high to the low. And we're keying off that high right there. That's not the all-time historic high. The all-time historic high was put in on December 6th. A few points above that. Okay? But that clearly shows the high on this chart to the current low. And we got a shot right now at a great big doji. Okay? Now remember, this is where the markets closed on Friday. Okay? April the 4th. And see if we get a price. See if it pops up. I don't think it's going to pop up. I'm not going to wait for it anyway. Alright, so somewhere around 50.94 in that vicinity. Oh, there it comes, the low, 50.74. And then here's where we opened last night. Okay, so we definitely had a gap lower open. Put in a new low in this downtrend. And we bounced all the way back up to here on that fake news. Interestingly though, the market's kind of holding middle ground here. Okay. Well off the low of the day, well off the high of the day. The green line is called the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. And this is how price travels. Leg, retracement, a leg, retracement, leg. Now, we look for the retracement. The last two retracements, price always reverts to the mean. In our case, the mean is green. It's called the BBC. The pullback, whether you're pulling down from above or pulling up from below, the pullback to the BBC holds more often than it doesn't. Now, before we can get back to the BBC, market's got a whole lot of work to do. Here's the 24% fib retracement. Well, first it needs to close above Friday's close. Then we got the 24. And then we got the high of today's session. And then right here we've got resistance times 2. The 38% reverse fib and the black step line. Above that we got red and falling. Then the 50% and then the 62% reverse fib. And then up here Of course, we have potential resistance in this area here. Cross here, got this double top, and then right here where the bearish cross happened. When you have a bearish cross, that's when the red line gets below the green line. That leads to an extended move. The first time price revisits that area will almost always be good resistance. And I have no doubt that it will be this time. Question is how long will it take to get back to that point? Markets fall faster than they rise. Why? Because it takes financial commitment for price to rise. In the absence of buying, price just naturally deteriorates. And of course, when institutional traders who specialize in short selling realize that the institutional buyers have hit pause on the buy side, well, then they pile in like a pack of wolves and drive it down as far as they possibly can and look for that spot to get long and ride it all the way back up. Whether it takes 6 weeks, 6 months, or 6 years, it will come back. That's how the indices are created. Stocks can go to zero, but not the indices. I explained all that on Friday. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, stick charts, and range charts. Has everything to do with account size. They can withstand a much deeper drawdown, the URI. They can stay with a profitable position far longer than you and I might be comfortable with. So whether you trade futures, stocks, crypto, Forex, ETFs, whatever, I encourage you to spend 2 minutes with the daily chart before you start trading and see what the deep pockets are doing. See what they've done overnight. Okay? They're the ones who move price. Simply doing whatever they're doing at any given moment in time makes getting your goal for the day simpler. We're getting closer to it. This is a doji. It's going to be really interesting to see how we close today. Because of that fake news that came out this morning, traders are going to have a very difficult time believing any actual news that comes out. So, we'll see where it takes us. All right, the vertical line separates today, Monday. Back here's Thursday. And then further back is Wednesday, Tuesday. You get the idea. Now, these are last week's zones. Why? Well, the new zones come out Monday morning at 6:15 a.m. Eastern. We've published the zones for our members and trial members for the last, well, it's over 15 years now. So any alerts that go out on a Sunday night are always based on the previous week's zones. And then any alerts that go out after 6:15 a.m. Eastern on Monday, those are based on the current week's zones. Okay? All right. So this was the gap lower open last night. Now remember, it was 25 minutes into the first candle that these targets got published. Okay? So from the support the market found, and you'd have to go way left to see the reason, but it's there. Got a leg, a retracement, a leg. This price always reverts to the mean. Price always pulls back to the BBC. And we expect it to be resistance or support. When it pulls from above, it's support. So we got resistance, resistance, resistance. But once we had blue and climbing below us, that enabled us to get above the BBC. Now these highs right here are right in the middle of where we closed on Friday and opened last night. Friday's close was up here. Should say 1630, and it does. Yeah. So we got a leg, a retracement, a little double bottom across here. Then we get above the BBC, and again the pullback holds. See, it held from below, and then when it pulled down from above, it held. Now these are pretty enormous candles. Okay. The 30-minute candle right now, the average 30-minute candle is let's see if we can stretch it out a little bit. Probably not. Computer's lagging a little bit because of all the volume going through. We'll try to do it one more time. There we go. Okay. Can't pull it down far enough. Market's just not used to this kind of volatility. Anyway, the average 30-minute candle is about 50 points. So we can get here. Can we get a reading? No, I'm going to quit trying. Wasting time. So we got a leg, got a retracement, we got a leg that took us all the way up to the long target. 52.81. That high right there from Friday. Now remember, these targets were published 25 minutes into the life of this 30-minute candle. So we never made it to the short target. We did reach up and nab the long target. Spiked it by a couple points. Came back to the BBC, the pullback held. And a leg, a retracement, a leg, a retracement. Now, blue and climbing has gotten, along with the step line, directly above price. So that can become potential resistance. If price starts to move higher, you've got potential resistance here. You got it here. And obviously, you got it up here. You don't have to worry about these. Those no longer count because of that. On the Dow, gap lower open last night. Got a leg and a retracement and a leg. And see how blue and climbing came in. Got us above the BBC just like on the ES. So we get a leg, a retracement, a leg, a retracement. Now this pullback, it spikes the BBC, right? But it's still touching the green line. And then on that mad dash to the upside, we didn't quite get all the way to the short target. We're really just kind of sideways on the session. But again, these are huge candles, okay? Got to remember that. They look just like ordinary normal candles. Wish I could get... Oh, the computer can only do what it can do. And it's processing all this volume on two different platforms. So, is it going to come to life? Is it? No, I guess not. All right, so that's where we're at on the Dow. On the Russell, gap lower open last night. Price pulls up to the BBC, the pullback holds. So we get a leg, a retracement, a leg, a retracement, a leg. When red and falling gets directly below price, it's usually on its way to becoming blue and climbing, which is bullish. And that took us above the BBC. And then we got a retracement, and a leg, and a retracement. And then we got a big leg on the fake news. And that brought us all the way back to the BBC, where we got another leg and a retracement. And we're pulling back to the BBC. So right now it either holds or it doesn't. We'll just have to be patient and see. On the NQ, gap lower open last night. Alerts came out. The targets came out during this candle. We almost made it to the short target, but not quite. Almost made it again. A little double bottom going there. So we pull back to the BBC, and it holds. These are 30-minute candles. It holds and it holds and it holds. Then we get a leg and a retracement, a leg and a retracement, and then a huge leg. Takes us all the way up to the long target and a little bit beyond. And then we come slamming back down, and we're just kind of moseying sideways, as we are with all four of the indices right now. Crude oil, gap lower open, pull back to the BBC, the pullback held, the pullback held. We hit the short target of the tick. Keep in mind the targets were published during 25 minutes into this first candle. But we hit it. And then we got above the BBC, red and falling, turned to blue and climbing. Leg, retracement, leg, retracement. Then the big leg. Okay. Back to the BBC, the pullback held. But now blue and climbing is directly above price. And the step line is directly below price. So price is trapped right here. How long could that last? Gotta wait and see. Gold. This was the open last night. Never quite made it all the way to the short target, but plenty of room to get your gold for the day. I mean, on this candle here, just as an example, sure, 3,026 down to it's about $2,600 per contract traded in that one candle. When the price of gold moves $1, it's worth $100 per contract traded. So red and falling turns to blue and climbing. We punch our way through last week's lowest zone, pull back, and it holds. Now, when price encounters a weekly zone, you only get three things. 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, the slice. And so, we are now back below the BBC. And we're just about back to the lows from last night. The potential to hit the short target is still there. We could go deeper. If you notice, the black step line is starting to slowly angle to the right. When the black step line crosses red and falling, that's when you anticipate a retracement back to the BBC. And silver. This was the gap lower open last night. You can see it right there. Okay. And then we got a huge move last night at 9 o'clock Eastern. Leg or retracement. As you can see, the pullback held for quite a few hours. We get a leg, we get a retracement, and now blue and climbing has turned to red and falling. Now we're actually back below the BBC. Okay, so if silver starts to drop, this area right here, where the step line crossed red and falling, turning it to blue and climbing, that's a very important price, very important number. So if silver starts to drop and you trade silver, be ready. It's not a beginner's market. Cut your teeth on something simpler. But as you can see back on Friday, how all these retracements, all these pullbacks held and held and held. Okay. So whether they're pulling up from below or pulling down from above, you should expect it to hold until proven otherwise. And on the daily, there is our doji. That's what I was suspecting. So the question now is, do we move up into the close to the 24% fib retracement, or do we sell off into the close and head down to this new low? Time will tell.
I think we sell off.
Yeah.
We'll see.
I don't. But all right.
We will see.
Okay, Michael's going to give us a recap of what happened in the live training room this morning and then do some trading on the TradingView platform. I'll come back and wrap things up with our good word for the day.
All right, here we go. Let me just go to the end on this. And
all right, looks good.
Great. All right. Here we are. Good afternoon, everyone. Today is Monday, right? Monday? Is that right? I think it's Monday. Monday, the 7th day of April, 2025. It is Monday. Monday, the 7th day of April, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. All right, click on that purple button and it's going to bring you to, oops, not that page. It's going to bring you to, well, this page. And I guess I need to update that link. Well, when you click on that, it's going to bring you to the appropriate page and then fill out the form. Once you fill out that form, you will be sent everything you need to get into the room in the morning, right? You just got to put in your TradingView login ID. There's 5 multiple choice questions. You ask for your name, your email, and your phone number. There's 5 multiple choice questions, and down at the bottom, put in your TradingView login ID. If you do not have a TradingView login ID, there is a link on the page that will send you to this page. All right. If you don't have TradingView yet, just watch this video. It's about 3 minutes long. If I click on it, it's 3 minutes and 13 seconds long. Watch that video, and you'll end up clicking on this link right here. That will bring you to this page. Make sure you click on monthly. Essential is all you need to get started, and you'll get a free trial with that. You get a 30-day free trial with TradingView stuff, I believe. And yeah, that's all you need. Well, you need to get real-time data. That's also in the video. All right, real-time data. It's in this video. Just watch that video. All right. All right. So, as everyone out there probably already knows, the markets were wild again today. And when I say wild, I mean the DOMs were regularly looking like, hang on, I have a picture of it. They're regularly looking like this. Okay. Where we have a spread there.
The fake news about Trump giving a 90-day reprieve on the tariffs was nothing but fake news.
Right. All right. It was fake news. And it gave tremendous opportunity. And you can see how fickle the market is. You know, one bit of fake news and the markets just started to run like crazy.
And the second the White House clarified that Trump said no such thing, then the markets ran
right back down.
But
And
on the
so,
daily, we have a big, huge doji. So
mhm, yeah, we'll see. We'll see what happens with that. I don't know, but when the DOMs look like this is the NQ DOM. This was this afternoon at 11:37, or today, this morning at 11:37. When the DOMs look like that, you don't want to trade. Right? It doesn't matter what time frame you're on. It doesn't matter what you're doing. Now, if you're on like a weekly, then I suppose you losing a few ticks like that at the beginning of the trade isn't going to be that important. But if you're trying to scalp, you can't scalp when you got that much of a spread between the bid and the ask. You see, the actual price is right there, and it's showing this much space. Look at all these spots in here. There's nothing. That's just crazy. You can't trade like that. This is the ES. You know, the ES typically used to have 3 digits on all these right here, closer to price, and even that's got a two tick gap or a 2-tick spread. The Russell, which is what we traded most this morning, that was pretty calm right there, and the gold was too, but the gold kept gapping up and down. The Russell was the easiest one to trade this morning, so that's what I did. All right, so looking at the spreadsheet now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, I made adjustments to the way that I was trading based upon the volatility in the markets and which markets looked like they were the most tradable. So you can see the Russell, we got 490 ticks. The gold, we had 12, and the ES, we had 12. We were up $2,720 a contract, and we took 3 minutes and 4 trades this morning to get to $1,500. Took a total of 41 trades. Most of those trades were on the Russell. 35 of those trades, I think, were on the Russell. 6 were spread out between those 2 markets. I think 3 each. Yeah, 3 each on those 2 markets. So on the month now, we're at $8,655 with 1 contract over 3 business days, averaging $2,885 per contract per morning session. The year, we're now at $92,942 over 56 trading days, averaging $1,659 per contract per morning session. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work 8.11 hours, and you would have made $18,492. That's averaging $2,278 per hour. Okay, pretty good money if you can get it. Now, let's get into the trades that we did. All right, we'll start out with the gold, and then we'll go to the ES. We didn't even do a single trade on the Russell, so I'm gonna hit Alt and back on this because there's probably a million bars, and that'll be the fastest way to get us back to the beginning. And there we are. Those are our trades on the Russell. Our first trade on, I'm sorry, not the Russell, on the gold. Our first trade on the gold was right here. We picked up 5 ticks on that one. And the second trade, we picked up 7 more ticks to get us to 12. And then we had a break-even trade. And then it just started gapping. Gaps between the open and close. Gap, 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 gap. I wasn't interested in trading that when it's bouncing around like that. So I didn't trade it. Now, one of the things that I just said, I don't know if you heard it or not, but one of the things that I just said is it doesn't matter what time frame you're on. If you have gaps, you're still going to have gaps. Okay. If you go to the 100 range on gold, we probably only had a few bars today. The 100 range on gold. All right. From here to here, the 100 range on gold. But there's a gap from there to there. There's a gap from there to there. There's a gap from there to there. So you still get the gaps even on 100 range. And you know, you could trade it if you wanted to. It would work if you wanted to trade that, but I wouldn't recommend it. Okay. So look, there's a gap right there. I'm gonna do the Russell last. All right. The ES is the only other thing that we traded. Right. Do the Alt and back on that. Now this is a 19 range ES. Okay. So I actually need to do this on a 7 range because that's where we actually took the trades. All right, so let's go back here on this. Oh, still trying to figure out, look at all those bars. We're not even to 12 o'clock yet. Still not even to 12 o'clock. See, it would have been insane to try to trade this market today. I'm curious how many Telegram alerts were triggered today. This is 11:30. We're only to 11:30. Back to 11 o'clock. All right, can I just tell you what we did? On the ES, we had a +2, then a +10, and that's where we've got the goal for the day. We're at 12, and then we had to break even. That's all we had on the ES. All right, I mean, I could keep scrolling back, and eventually we'd get to the beginning of it. But you see all the gaps that were happening in here on the ES, and this is on the 7 range. I even went to a 19 range for a little while. I didn't trade it on the 19 range, but I went to look at the 19 range, and you'd be looking at all the same exact stuff. Okay, you'd be looking for a price to get into the oversold. And what we were doing today, I was doing conservative trend trades today. So I wouldn't buy when it got into the oversold. I'd buy when it came out of the oversold. All right, conservative trend trades. That's what I was doing. And that's it. Now, the thing about the conservative trend trade, if I bring this up right here, I blew it up so you can see a little bit better. This is when we're doing the number 3. It's in the direction of the YVR, and when price comes out of the overbought or oversold. One of the things that I didn't put in there, though, is every trade that you take, before you take another one in that direction, it has to complete the move from the oversold to the overbought. All right, if you're buying, it's got to complete the move from the oversold to the overbought. If it doesn't do that, you don't take the trade until it does. You don't trade in that direction again until it does. All right, here's an example right here where this one gave you a long trade right here, completed the move, oversold into overbought. Then it gave you a pullback right here. This one gave you a long trade right here that did not complete the move. That would have stopped you out. So you don't take the next one right here. Okay, you skip that one. Wait until it gets into the overbought, because this one right here, that would have stopped you out too. Right, well, if you got right there at the open, I guess if you bought it right there at the open, you would have had a chance to move your stop to break even. But you have to wait till it gets into the overbought like that. Goes all the way up, and then comes back down and comes out again. So right there, you would have been able to trade that. And right here, you would have been able to trade that. All right. And right here, it switched down to the other side. But that is one thing that I didn't put in that little quick cheat sheet in here that's on the web page. By the way, this, if you don't know where this is on the web page at, hang on a second, Dan. Do you take the short target and long on the opposite of the short? For example, is short. Hang on, let me get into it when I get into the Russell stuff, Dan. Okay. Because that's where I did almost all the trading today. But so what you do here, you still have your regular targets, Dan, in here. You still have your regular 40. For the Russell today, I had a 45 tick target, and I hit that target many times today. Many times. I mean, the high of the day, we're up 514 ticks. Then we stopped out. Our second to last trade, we stopped out. We got down to 479, and then we made one more trade and got us up to 490. But yeah, so that's what you want to do. All right, you want to make sure that when you take a trade, that it goes completely from the overbought down into the oversold. If it doesn't make it into the oversold, you skip the next trade. Wait until it does the whole length. All right, because from an indicator, from an oscillator perspective, that continues the trend. All right, if it fails to continue the trend, like this one right here failed to continue the trend, then don't take the trade. Don't take the next one. Okay. All right. So on the ES, we just had those 3 trades. We didn't trade the NQ at all, but we traded the Russell a ton. So let's get the Russell up here. Okay. Now, before I go into that, let me just show you one more thing about the NQ. One of the things I had shown this morning about the NQ, at the time, it looked like this. And I said, this is a head and shoulder pattern. And it was before we knew about the fake news. It was probably like this. It was before we knew about the fake news. For sure about the fake news. We knew about the news, and it had done that run up right there. And then there was rumor it was fake news. And then before we knew about it, I said, this is a head and shoulder pattern. This is actually pretty bearish. And this is your neckline down here. But it's going to build another shoulder on the other side. So you can see that's what it started to do, is build that other shoulder over here. Now this is an ascending head and shoulder pattern so far, because the bottoms are going up, all right? So that's bullish. If it does not break down, this is bullish right here. But it looks like it's going to break down. This is the NQ on a 5-minute, by the way. Okay. the neckline is way down here, right? If it breaks down below that neckline, look out below. And I suspect that's what's going to happen. I don't know, but again, we're just going to trade what's in front of us. All right, so let's go to the Russell. Now we had the Russell on a 19 range most of the morning. I had it on a 50 range for just a short period. What's it on right now? It's on a 19. Okay, so see all those trades in there. And of the 35 trades, I still had my share of stop outs. I think I had 7 stop outs today of the 35 trades. But I had the 45 tick wins frequently today. All right, so here, our first trade on the Russell was here. We had a break even. All right. Rather than go through it trade by trade, I'm just going to read it off to you. Okay. We had a plus 10. Then we stopped out, put us at minus 15. Then we had a plus 45, put us at 30. Then a plus 9, put us at 39. Then we went up to 59, then 68, then 86, then 131, then 176. So those big jumps right there. From 86 to 131 was 45, then 131 to 175. 176 was 45. Then we had a smaller trade up to 186. Then we stopped out. Then we went from 161 up to 2 something. So that was a 45. 201, I guess it's something like that. 206. So that was a 45. Then we went from 206 up to 251. So that was another 45. So every time I get those 45s, I'm hitting the target with the Russell. And we did that a lot today. Then we stopped out down to 226. Then we got 45 back up to 271. Then we stopped out again down to 246. I went from 226 to 271 to 246, up to 291, then to 326, and to 371, then to 416, then to 426, and to 435, and then we stopped out down to 410, and then we stopped out again down to 385. We got a small gain to 389, then a 45 ticker down up to 434, then another 45 ticker up to 479, then another 45 ticker up to 514, and then we stopped out minus 25. That brought us down to 479. And wait, went from 479 up to 514, and then we stopped out minus 25. I think I did the math wrong on that. 514 minus 25 should be 489. So I'm off by 10 ticks on the positive side. We should have actually had 500 ticks even today. But I got 11 ticks on the last trade. That got us up to 490. But you can see this is when the news came out about the tariffs, the fake news came out, and the market just went nuts. And all the markets did the same thing. Okay, and it was bouncing all over the place. I mean, look at all those bars from 10.15 right here to 10.17 right here. Look at all those bars. It was just wild. And then we found out it was fake. So we're just trading what's in front of us here. Now, let's go to the end and we'll look at this with, rather than go through every single trade. We'll see if we have any coming up right here, any new trades, any fresh trades coming up right here. Okay. So all I'm looking for is for this to come out of the oversold when you're above the YBR. All right. When it comes out of the oversold and you're above the YBR, that's the trade we're going to take. So Dan, you asked, how do you trade for the targets? I leave the targets on. I just leave the targets on. I move it to break even. And if it goes to the target, it goes to the target. Once it starts to run, I'll lock in 10 ticks. And then it runs a little bit more, I'll lock in 20. But most of the time, it was going straight to the target today. Okay. And once it gets to the target, I'm out of the trade until it does it again. Okay. So like right here, it's already run. If you would have taken the long trade right here, it's run up and it's hit the target. All right. So now you're getting ready to take another long trade. So what I would do right here is just get ready for this to come out of the oversold. If it comes out of the oversold, I'm going to buy it. Okay. So it's gone into the oversold a little bit more. And if it comes out of the oversold, I'm going to buy it. I need an up close on this bar for me to buy this. Okay. Now an up close on that bar may do it. It may not. But I'm going to get ready for the up close. Okay. If we get the up close, I'm going to buy it. There it is. I'm long right there at 18.4. Okay. Now when that goes 10 ticks into profit, I'll bump the stop to break even. Get ready. There it is. Stop to break even. Okay. That's it. just like that. And now I'll lock in 10. Oops. You see my target is right there. It almost hit my target already. I'm going to lock in 10. And there's my target. That's a 45 tick target right there. And there it is. Bam. 45 ticks, just like that. Okay. Now I could extend my target today because we got so much volatility. I could make that target like 60 ticks and probably still hit it every time. But, you know, people really start to lose when they get greedy. What's working here is working just fine. I mean, right there, that was 10 contracts for 45 ticks on the NQ. Let's do the math on that. Let's do the math. 45 times 5 equals 225 times 10. That was $2,250 in less than a minute. And that's happened again and again and again. It's about to happen again right now. Okay, we're oversold. We need to come out of the oversold. So I need an up close on this bar to pull it out of the oversold. All right, so I'm just getting ready here. There it is. I'm going to buy right there. I just bought right there, 24.7. I have a 25 tick stop on this. If it stops me out, it stops me out. If it doesn't, it doesn't. Okay, I have a pretty good entry. I'm off by a couple of ticks, but not too much. And we'll see what it does here. It stopped me out, minus 25. All right, so the net between those two trades is plus 20. But that's it. And you know, I did something this morning. I showed people this morning. I actually drew it this morning. That's why I went to a 50 range for a little while this morning. I was showing this on a 50 range. You know, if you don't want to have to manage your stop, and you just want to put something on like this and say, I'm going to do a 50 range bar, but I'm going to use a 20 by 30 stop, a 20 by 30 bracket. Okay. And that's your bar. That's a 50 range bar, right? That's a 50 range bar. Oops. Hang on. I'm trying to draw this over here so you can see it. All right, that's a 50 range bar. So you know you got a 50 range bar coming up, and you don't know anything about the bar except where it's going to open, we'll say. We'll say you're going to buy the open of the next bar. Okay. You're going to buy the open of the next bar. So yeah, this little guy. So you just buy the open of the next bar. Now that's all you know about that bar at that point, is that you had the open of the next bar. You don't know how far up it's going to go. You don't know how far down it's going to go. But the oscillator, you know, the trigger in this case, said it's time to buy at the open of the next bar. So you buy at the open of the next bar, and you know it's 50 range bar, so you know it's going to go 50 ticks, right? And within that bar, you have a 20 by 30 bracket. So you know by the end of the bar, you're either going to stop out minus 20 or you're going to get plus 30. So you're really going with just the indicator, the oscillator, telling you exactly where you should enter to gain 30 ticks. And you don't have to manage your stop or anything like that. Just put it on with your bracket and let it go. Just put it on with your bracket on and let it go. And remember, you're not trying to gain 500 ticks. You're trying to gain 20. Or, you know, that would be my goal for the day. But even if your goal for the day is more than mine, you know, say yours is 3 times mine, then you're trying to gain 60 ticks. Okay, if it's 5 times mine, you're trying to gain 100 ticks. You know, you're only going to do that 3.5 times. And so you would enter here, and it doesn't go down 20, and it does go up 30, at least 30. Do you see what I mean? So the way that I would manage a trade, the way that I have managed a trade, I just showed you how to manage it. I get in the trade like I always do. I move my stop to break even like I always do. I lock in 10 ticks when I can, and then I let it go. All right. Sometimes I'll say, okay, I'm going to lock in 20. So I'm going to get 20 or I'm going to get 45. And today, most of the time, I got 45. I don't know how many of these trades got 45 on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 out of 35. I got the full target on today. I keep trading. The question was, so how do you manage if you take 3 trades and they all stop you out in your minus 60 ticks? I keep trading, but you or somebody who is relatively new to this, you may say the maximum they're going to take in a loss on any day is minus 60 ticks, and if that is what your decision is, that is what your trading plan says, then stick to that. Okay. But you have to have a plan for that kind of thing. Me, I just keep trading. Okay, because I know I have an edge, and I know if I keep trading, eventually I'm going to be positive. Now, I was negative at one point today, but I did get the goal for the day first, and then I went negative. Well, on the Russell, I went negative at one point. But from there, it was, minus 15 was my negative point, and it was all uphill after that. But you got to have something in your trading plan for that. Okay, like right here, we're about to have another trade on the Russell. Okay, we need an up close. The last one was from over here. Actually, that wasn't even a long trade. This will be the first one in this trend right now. If it gives us an up close on this bar, now we should make it up here to the prior swing high. So if we get the up close, and we're going to have it right here, I think. There it is. So I got an entry on it. Now my stop is right there at minus 25. And I'm on a 50 range. Crap, I did this wrong. That's my fault. That's my fault. I just stopped out on that. I did on a 50 range. I should be on a 19 range. That was a mistake. Okay, well, anyway, we'll see if we can get it back. That was 25 ticks. And right here, we got another long trade right here. Okay, and on this one, I can bump my stop to break even. And hopefully we'll get those 25 ticks back right now. Okay, it should get up above this prior swing high and get up to here. All right, I'm just going to lock in 10 on this. There it is. I got 20. There's 20. I got 20 out of the 25 back right away. Okay, so that wasn't hard, and that was a mistake. I had it on a 50 range. On a 50 range, I should have had a 60 tick stop. And if I did have a 66 stop on that, I'd still be in the trade right now because I'd have a 75 tick target, so I'd still be in that trade. Okay, but you see this went all the way from oversold to overbought. So now when it comes back, actually this was the one that we took. This was the one that happened right after it. So there were 2 of them right there. I could have just gotten 45 ticks on. 90 ticks, just like that. Bam, all done. Okay, and this, with the volatility that we've been having lately, I didn't trade at all on Thursday and Friday last week. I didn't trade at all. I didn't even look at the markets on Thursday and Friday last week. But but I know it had to be a lot like today. See, this did not go into the oversold, so it did not give you a trade here. But the last one went from here into the overbought, back down to the oversold, giving another trade into the overbought, setting up another trade down here, not quite a trade. So we have to wait. It only takes a minute. Here, we're there again right now. Okay, so we need an up close, and there it is. I'm long again right here. Stop going to break even. I should have had my stop break even. If I stop out on this, it's my fault because I should have had it at break even already. Yeah, I did stop out on that. I should have had it at break even. But from the entry point right here, it went about 30 ticks into profit before it came back down. If I was on my game, I would have had that. Now this one did not put in a higher swing, so I'm not interested in this next one. Okay, that's what I was trying to show you guys. I'm not interested in this one coming out of the oversold. I'm interested in it, but not interested in trading it. Now it came out, it's got to get into the overbought, and then the next one would be more attractive to me. But you see why that's not a good trade? That would have just stopped me out. Okay, so I've made 2 mistakes now, and both of them stopped me out. If you have not taken a free trial with us, go here to mytradingiq.com. Mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It's going to bring you to the registration page. Just fill it out. Okay? Just fill it out. and make sure you give us your TradingView login ID down at the bottom. If you don't have TradingView, there's going to be a link there once I set that page up in a few minutes. There'll be a link down there at the bottom, and just click on that link. It's going to bring you to this video right here. All right, watch that video. It's 3 minutes and 13 seconds long. Watch that video. You'll end up clicking on this link right here that is going to bring you to this page. Click on the monthly. Essential is all you need. This is actually going to give you a trial. You don't actually pay the $14.95 up front. It's going to give you a trial, and when you sign up for that trial, you will have to get real-time data. Unless you get that from your broker, you'll have to get it. This is a trade right here that I just missed while I was telling you about that. All right, it did end up going up into the overbought. Like that one just went into the overbought. So now we can take the next one. I did the conservative trades because of the volatility, Dan. Yeah. Yeah, with the leg lengths that we were having, there were going to be a lot of flat spots. Right. That's why I did the conservative trades. When you have big leg lengths, the conservative trades are the ones that work best. Okay. Remember, the bigger leg lengths are the things that create the flat spots. So if you have big runs, it's going to create flat spots on the top, and that generally will create flat spots on the bottom during a bigger pullback. Okay. Oops. Hey, what's that guy doing there? Didn't mean to do that. So you see the YBR just flipped. So now you're looking for it to get up into the overbought, and then we'll sell it. It didn't quite make it to the overbought, but it might pretty soon. This is kind of choppy right here. So right here, when it's choppy, you could do aggressive trading, but there's plenty of trades with conservative trades. I mean, I traded 37 times on the Russell today, 38 times. All right, so that's in the overbought right there. We need to come out of the overbought right now. There it is. So I'm going to short it right here. Oops, I didn't get filled. I clicked on the wrong thing. Well, I would have shorted it right there. It's too late now, but I would have shorted it right there. I clicked the wrong place. And I would have had my stop at break even. Had I shorted, I would have had my stop at break even right now, and I'd be out of break even. But this needs to go down and get into the oversold, and then pull back up and give us another shot at it. Okay. But that's, when the markets are wild like this, take your DOMs out and look at your DOMs like this. Okay, there's gold. There's the Russell. Here's the ES. And here's the NQ. There is no way I'm going to trade the NQ. No way. Look at the spread. There's no way I'm going to trade that. So slide that one back. The ES is okay to trade, but it's with the smaller time frame like this, it's bouncing all over the place. And I really don't like the ES because of that. Okay. And the gold, though the gold looks good right here on the DOM, it doesn't have a huge spread. It's gapping all over the place in here. See all those gaps? That's why I moved the gold off. And I said, all right, let's just watch the Russell, because Russell seemed like it was going to be tradable. And what do you know? It was. And right now it's got a little bit of a spread. I don't know what just happened to make this right here. It's got a little bit of a spread right now, but it didn't have that spread most of the day. So it's a pretty simple decision for me on which market to choose. And I was able to trade the Russell, focus on just one market. This one, it worked out well for me. And even like right now, if we get enough close on this bar, it'll be a long trade on the Russell, and I'll take it. It should be coming up right here. There it is. And there it is. And the stop's going to break even. Okay. And I'm out of break even on that one. All right. Well, that's going to be it, guys. I'm going to wrap it up here. I do have some stuff going on here coming up, so I got to wrap this up. I will fix that so the link is there in just a minute. If you have not taken a free trial with us, go here to the homepage at mytradingiq.com. Go to the homepage here, click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It's going to bring you to a registration page. Where all that we ask for is your name, your email, your phone number. Down at the bottom, give us your TradingView login ID. If you don't have a TradingView, click on the link there, and it's going to bring you to this page. All right. Make sure you watch this video. It's 3 minutes long. Watch the video. Click on this and get TradingView. Give us your TradingView login ID. Once we have that, we can enable the indicators so your indicators are indicating on your desktop. All right. All right. And that is it. With that, I can best back up to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. All right. Dwayne's not ready. He's probably getting ready. But Dan, with the passport package, what is likely to be able to pay for while learning to trade with your system? I would pension. I imagine all of them, Dan, but you know, if you're talking about in the first 3 months, then I don't have any idea what that is. But there's no rush, you know. You start out and you just, it's like today, you know. A lot of people would have not traded at all today. And, you know, I could have just said, well, there's no way I'm going to trade any of this junk. But I just did quick analysis of the markets and what they had to give and chose the one that best suited the way that I like to trade. And then I chose the most conservative trade setup out of the ones that we have. And it worked out great. You know, I knew there were going to be plenty of opportunities doing conservative trades today. Plenty of opportunities. And with the leg lengths that we're having, the conservative trades was the way to go. Because the longer the leg lengths, the more likely you're going to have the flat spots. And the flat spots are where you stop out doing aggressive trading. So it's just putting the pieces together to make a you know, logical decision about what you should do. And that's what I'm there for, to help you make that logical decision. Okay, Dan? You know, you could have paid for it today if you had multiple contracts on. You know, with just one contract or two contracts, it was pretty close, right? Today, I was up $2,720. So with two contracts, you could have paid for it today if you did it just like me. And I had probably 10 stop outs today. I had two while we were doing this, right? I stopped out twice. I made two mistakes and I stopped out on both of those. That put us at 9, I think, on the day. 9 stop outs total. Still up 450 ticks or something like that right now. All right, Dwayne is back, so we can pass it out. Back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
Excellent.
Recap of the morning session.
Today, it took 3 minutes and 4 trades to get to $1,500 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, if you want to become a member, Michael just explained to you how to take the trial. If you want to become a member, go to mytradingiq.com. Make sure you understand everything that's on the website. And then send an email to support@cfrn.net. In the subject line, put, I'm ready to become a member. In the body of the email, put your name, put your phone number. We're not going to call you, but we'll send you an email that explains everything it means to become a passport holder, everything you have access to. And there's even a link in the email you can click to seal the deal. You're going to get 2 hours of live training every trading day. It's interactive training. Live trades in real time with the real money while you trade along in your sim account so that you can qualify to go live. You will be asking every question that pops into your head. because it's a mechanical model, eventually you're going to run out of questions. But it's important that you do not be shy. Don't think you're going to just absorb it by watching. You got to ask the questions. And once you have the answer to the question, you can ask the same question in 3 weeks or 3 months and you'll get the same answer. So when you're in the live training room, nobody sees what you type into the question box except you, me, Michael, Valerie, or Bert if they happen to be in there. But you got to ask the questions, because there's going to be things that you see, you hear, but you don't understand. Ask the questions, get the answer, and move forward. Along with 2 hours of group training every trading day, you have access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder, fluid across all markets, all time frames. Stocks, futures, crypto, Forex, ETFs. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That cycle has been in place since the inception of the markets. It will remain in place until the markets cease to exist. Why? Because that's how markets work. As a passport holder, you get the Logic 247 alerts around the clock. Again, last week we had over 50 alerts issued and 2% stopped out. You get the concierge trade alerts the second they're published each evening. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones every week for our members over 15 years. December 14th of 2009, so this past December, we hit the 15-year mark. And you'll be able to attend the members-only workshops every Thursday night. On top of that, you get the golden key that opens all the private channels in Telegram. We have public channels, we have private channels. But once you become a passport holder, you've got access to all the channels. In fact, you have everything a trader needs, all under one roof, one low price. Study up here. Send your request to become a member right here. Trading's not easy, but it can be simple. So let's wrap it up with our good word for the day. Now, back on Friday, we talked about the best is yet to come. Let's see what we got on deck for today. Respecting our differences. Romans 14:19. Let us aim for harmony in the church and try to build each other up. Paul wouldn't yield an inch when it came to standing on the central truths of Scripture. But when it came to traditions, personal opinions, and personal preferences, he said, let each be fully convinced in his own mind. Romans 14:5. Under the law of Moses, being circumcised was considered equal to having a covenant between you and God. So when Gentile believers joined the New Testament church, Jewish believers insisted they too must be circumcised. Not as babies, mind you, but as adults. Now, the circumcision, of course, is done on the 8th day because that's when a baby has the highest level of vitamin K in their body. As an adult, it's sort of a painful concept. Were these Jewish believers sincere? Absolutely. But they were sincerely misguided. When this issue threatened to split the church, the apostles met in Jerusalem, prayed about the matter, and issued the following opinion. Acts 15:28. For it seemed good to the Holy Spirit and to us to lay upon you no greater burden than these necessary things. Anytime a tradition or personal preference becomes equal in authority to God's Word, we've gone too far. Have you been upset with someone who doesn't agree with you on some non-essential point of doctrine? Have you been critical of someone whose opinion differs from yours? Perhaps in insisting on your list of do's and don'ts? You have forgotten the most important item on God's list, that we exhibit love. Jesus said in John 13:35, by this all will know that you are my disciples, if you have love for one another. Our hearts can be in unity even when our minds don't agree. We can walk hand in hand even when we don't see eye to eye. As theologians often say, in essential things, unity. In all things, charity. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.